give me the big picture. What's my takeaway this morning?
Yeah, to me, I mean, we'll find out more details as the morning goes on. But yeah, it looks like a sort of a three-pronged aspect to this strategy review. One, those big capital returns you mentioned, 10 billion through to 2026. Those cost cuts or cost savings, as they've described them, 2 billion or so, again by 2026. And then the interesting thing was that organisational rejig. So, you know, they split out a few more things. Right now it's 3 units. Now there's going to be 5. You know, a separate UK retail bank, separate private and wealth management area, and the investment banks standing alone. But yeah, largely as we thought, like not huge kind of substantive changes at the investment bank in particular.
Can we talk about the buybacks? This is my favorite part about the bank thing. Tom was on air with me yesterday, and all I asked him about was the buyback story. And he was like, you know, there's other things in the banking world.
Yeah,
the Barclays,
but not according to Chrissy.
Not according to me. It's all I care about. Barclays, buybacks, walk us through it.
Yeah, so it's 10 billion in total. And I mean, to give you a bit of a comparison, it looked like it was about 3 billion this year. So 10 billion over the next 3 years. So I think that's Barclays, you know, really pulling that lever a lot more. That's probably going to be one of the main things that investors are going to be looking at today. It's that and, you know, those 2023 results. As you say, they might get a bit lost in all the attention on this investor rejig. But yeah, I would probably agree with Guy. They do look a little bit light on the CIB, which, again, speaks to these concerns shareholders have. That is a very lumpy business.
It is a really lumpy business, but it's a very big business for them and it's going to remain so. Why is ROE so low at Barclays compared with the rest of the industry? How do we get to these numbers that are so weak relative to the rest of the industry?
Well, I think a lot of people would point towards the investment bank, whether rightly or wrongly. It's basically because it sucks up so much capital, and when it does go wrong or slightly underperforms, that then has a ricochet effect. So, you know, and that'll be the interesting thing, is will these changes be enough to really change that picture? As you say, it's kind of pushing Barclays back to sort of the mean as it stands now. So certainly nothing too drastic that I'm seeing yet, but you know, there's a whole presentation to come on this, and you know, be interesting to hear how the executives lay it out. Yeah, it's going to be a long morning.
Tom's like, come on, like how long is this going to take? Let's talk a little bit about the headcount reductions as well, because this falls back in October. They'd already said there was going to be a write-down. Is this something that's going to be viewed as, all right, the numbers here, yes, they're weak. We knew they were going to be weak. Going into next quarter, does that just make the bar a little bit higher?
Yeah, well, I think so, maybe. In terms of the headcount reductions, you know, they laid out the cost they took in Q3 was about $1 billion, I think it was. And of that, I think it was 300 million plus relating to sort of making the headcount more efficient, as they put it. So, you know, I think that is the other picture I'm going to be trying to look into is, you know, will they go out there and explicitly say what these future cost cuts involve? You would assume it's got to involve personnel on some level. But again, look, 2 billion of costs doesn't mean the bank, as we know it, will change drastically, I would say.